Welcome in today's another session. This is the second session. We had business mathematics. So if you missed that one, you can run to the YouTube, search Mr. M.PATRICK. You'll get, we have solved something in regards to completing square method. As we said that we are here to simplify mathematics and accounting. So don't get worried, just subscribe to the channel, search Mr. M.PATRICK, then you'll be sorted out. Now, we want today to look into the qualities of useful accounting information. Qualities of useful accounting information. And in order, we know that that in accounting, we said we are going to identify the accounting information. We measure it in the form of monetary so that we can communicate it to the users, or we present it to the users for decision making. But we tend to realize that it must meet certain qualities. It must meet certain qualities. And those qualities, the ones we are going to use to look into them. And the first one, as you have seen, I've indicated on the board, the first one is relevant. The accounting information must be relevant. Good. So, how relevant? You must understand the users you are preparing this information to. What is their purpose, or what their need do they need for that information? Maybe if they are investors, you understand that maybe they want to invest into the business. If they are potential investors, the potential investors, they are those who are in need to invest with you. Or the existing investors, they are those who want to know, yes, we have invested in this business, how is it doing? So after you have realized that, you realize you have to make the information that is very relevant to them, so that they can make a good decision with it. So your information must be relevant. Good. Another quality that your information must meet, one, it must be understandability. Understandability. Good. Understandability. Good. When I say understandability, I don't mean that the information must be simple. No, it means that the reports must be generated to the abilities and the knowledge of the users concerned. You know, you must make it very understanding to them, so that they can make quick decision. You know, they can maybe if they are going to buy the idea in the information, it will be good for them, but don't prepare something that is maybe complicated. That's why we have the principles that brings about the standardization, so that when we have something that is standardized, this information will be easy to be understood. That may it be this organization has used this method maybe for depreciation. This organization has also used this one for calculating depreciation. We can benchmark one organization and the other and do what? Come in with something we call comparability, which will be easier for us. So make sure that the information you are preparing is very simple, so that it can suit the users or you are preparing to. So I've said it means that the reports must be generated to the abilities and knowledge of the users concerned. Good. Another quality we have, it's called reliability. Good. If accounting information is not reliable, it cannot be used to make maybe quality business decision. So accounting information must be verifiable. That is, you have to know that. It must be that information we can verify it. We must be able to prove the authenticity that is in it holds. We must be able to trail to know the income. When we have to know the cash flow of the business. So that is where the reliability is in. If you see you have shown us very well the cash flow of the business, the coming in and the going out of the cash out of the business, we'll be able to know that this information is good for us to rely on it in making the decision. That is the users you'll be preparing to. maybe the investors, the shareholders, the managers, the owners of the business. It will depend. The users you are preparing the information. So if you have come up with the information that is good, that meets all the requirements, it means they can rely on it in making the decision. Good. Another quality or another characteristic is completeness. From the word complete, that is just direct. We are being reminded that the user should be given a total picture. As I always say, accounting information is the mirror of the business. And the moment you omit certain information from the financial statements or the financial position you are preparing, it means you have not given us the clear picture of the business. So what do I mean? Do not omit any information in the financial statement or in any report you are preparing to your users. Do not omit anything. Remember what I mentioned in the earlier class, that in case you see this information does not meet the threshold of being admitted to the financial statement or the income statement, final income statement of the year, what you normally do, you record this information in the footnotes, or you can call them supplementary notes. This information, or you can call them accompanying notes. They will accompany your income, trading income and loss maybe report to the boardroom or to the users, to tell them that this, we did not present it on the income statement because of weights and this. It is in the accompanying notes or the supplementary notes. But do not omit anything that we need in in our business, because we want a clear picture. The report you are going to prepare is the clear picture or is the mirror. So by that, we will be able to make decision, or the users will be able to make decision. So completeness comes in. Good. So the next one, we have objectivity. Objectivity. Good. So here we are reminded the accountants must, you must present the information that is that does not have any unbiasedness in it. So in short, the information must be very accurate. The information must be very accurate, and by this, for you, the information to be very accurate here, the accountants, you have to avoid one. You have to avoid what? Personal perception. Because this is not something for personal. You have to avoid personal perception. This is something for regards to the firm, to the entity. So you are giving us the picture. So avoid personal. Prepare something knowing you are preparing for the business. Also do what? Prepare the personal opinion. Or you say, oh, for me I might see this, oh, I might do. No. This is avoid what we call personal opinions also. Opinions. Avoid personal opinions. Yes, so that by this, if you avoid personal perceptions and personal opinions, I assure you, you are going to generate report that is very unbiased, and it will help the users to present to make a really good decision. Good. The next quality that you must make sure that you adhere to is what? Timeliness. Good. As we always say that if you don't present something on time, the decision will not be made on time. So make sure that the information is presented to the users on time. If your information, you are presenting it on quarterly basis, make sure it is prepared and it meets the quarterly basis. If it is presented after half a year, make sure that it's being presented after half a year. Or if it is annual, make sure that it's presented on time. So the time factor comes in. That you are reminded as an accountant, make sure that on your calendar you have marked that the report must be submitted at a particular date and at a particular time to maybe the managers, to the shareholders, the government, to the investors, to the financial analyst so that they can do what? They can make a relevant decision. Good. We have another one, comparability. I think this one we are being just reminded. Remember, compare. We had done this in the principles. Comparability, remember I said that we are guided with the certain principles. That every accountant has to abide to the principles. There are certain principles you have to abide to. But in case you do not, maybe there is a way that you have to avoid maybe abiding to it. There is what we call, what we discussed on the convictions, on how to maybe cost benefit will come in, prudence will come in, or the materiality, maybe errors that will have to base. But at any given time, you have make sure that you are bounded to those principles, because those principles will make us to come up with something I've mentioned earlier, that standardization in a way that you will have the information, that information you are prepared for this trading period. We can at least also, when we come next year, we can also compare the information we are prepared with this financial trading period to the next trading period. And I gave out an example, like let's say in an organization, this trading period, you calculated depreciation using a certain method. Another trading period, you use this one. Another trading period, use it. So when we come to compare, it will be somehow not bringing out a clear picture for us, and it will not showing that comparability well. So to make decision, it will delay in making decision. So, but if you just make sure that you have adhered to the standards, principles and all that, the comparability aspect and standardization, it will be good for us. It will be good for the, not really for us, but also for what? For the users. Good. Then, so from one period to another, we must be able, we can easily compare the information from one period to another. Then we have another one. I can add you one, which we call consistency. Consistency. So in order for accounting information to be useful in decision making, one, it must be recorded consistently, meaning that the same accounting treatment must be applied at all times at given given period, maybe over trading period. This consistency and comparability, they go hand in hand. So we must be, the way you have treated this your business in this trading period, make sure you also do what? Treat it in the next coming trading period. So that is what we call consistency. Even consistency, I always relate it even to what? To the daily life. If you realize your purpose and you be consistent in it, on what you are doing, I assure you the results will be wow. So it's up to us. As I always finish, I will also remind you this. For me, I'm done with the qualities. Make sure that if you are an accountant or if you are in the business, make sure that you meet these qualities. Your accounting information meet these qualities. I think this one part, the session for today will be now making us to now get into more of the, to start getting numbers now. Because the next part I will come in, it will be about double entry system. So we are now going higher. As I mentioned, this is just a course unit to give you an introduction part of accounting. And then, because accounting is wide, as I mentioned, remember we are on the branches. We started with the financial accounting. We want to look into it, introduction part of it. We go to the cost accounting. We go to the management accounting, tax accounting, auditing accounting. So you see, accounting is wide. But this one, make sure you just follow up, go to the YouTube, subscribe, share to others, so that we can learn together. At least, whatever the field you are, you can at least have something in regards to accounting. have some knowledge in regards to accounting. Good. And also I'll be combining with the business mathematics, so that mathematics helps us to make sure that our minds are up to date. It's somehow in order. Good. So I will finish by saying that birds do not ask permission to fly. They just fly because they were made to fly. Fish do not ask permission to swim or to maybe conquer the ocean. They were meant to conquer the ocean. So they were meant to be amazing in the ocean. Flowers do not ask permission to blossom. They just blossom. Wow. And they just look nice because they were meant to look nice. All you have, it is in your hand. Do what? Go out and change the world. You are made with a purpose in this world, and also you have to make sure that that purpose is accomplished. So for today, may leave you there and wish you well wherever you are as we continue learning together. May God bless you, and bye-bye.